But the big talking point this morning has been Unilever, the kind of commentary that the management has set out, and more importantly, the Minimalist acquisition as well that they have made, clearly focusing now on the premium category within the BPC segment. Let's chat a little bit more about that. We've got Abneesh Roy joining in on the phone line. Abneesh, hi, morning. How is it that you're sort of absorbing all that's come out from Unilever, not just the Minimalist acquisition, but the fact that they're talking about urban slowdown, which is actually worsened, and which is why they're now sort of downtrading to smaller packs, which is currently underway for them.
Yeah, thanks. So yes, you're right. Lot of nuances to the results and the acquisition also. So yes, in terms of urban slowdown, this is something we had pointed in our preview also, which came around 1 month back. So you will see this issue plaguing almost every consumer company except maybe United Spirits or United Breweries. In rest of the companies, for example, Brokerage consumer results come out tomorrow. For other companies also, Tata Consumer, Bikaji, Nestle, you will see that results will be weak. So wherever there is a big inflation in terms of the raw material, either in terms of palm oil, which I think most of the FMCG company in one way or the other, directly, indirectly, have an impact from palm oil. And second is tea companies, because tea and palm oil both are up 30%. So raw material, there is a huge inflation in these two commodities. And yes, urban slowdown then becomes the other part of the problem. See, what has happened is in tea and soaps, companies have taken some level of price hike, and there is some grammage cut also, because at the lower end, companies would need to cut grammage because those are the price sensitive. So you will cut grammage rather than increasing price there. So that is the twin impact of lesser volumes than expected. My sense is gross and EBITDA margin are in line with the street expectation, our expectation. Now coming back to volume growth, if you see parts of the category for HUL has done quite well. So detergent and dishwash have both grown high single digit volume growth. Even in the hair care, they have seen 5% volume growth. And X of the winter, the personal care has also, the skincare portfolio has also seen mid-single digit growth. So it is not as bad as it looks. The tea and soaps both would have seen -7, -8% volume as per our view. And those are dragging down the overall volume to flattish. Coming to Minimalist, I think it's a good acquisition. It's a large D2C acquisition with 500 crore run rate. So yes, you are right. Now HUL will get a much bigger play in terms of the premium beauty and skincare, where I think they are a bit under-indexed versus rest of the portfolio. It's a profitable business, and 6 times EV to sales. The valuation seems fair given such large D2C brands we don't have in terms of easy acquisition, plus profitable, and there will be synergy and complementary benefit in terms of exporting it to other countries, and definitely in terms of manufacturing and distribution. HUL should be able to save some cost there eventually. And the good part is the current promoters of the Minimalist will also stay for some time before the transition happens. So net-net, it's a right acquisition, and market eventually will like it. And sector is coming back in flavor. HUL also, my sense is when other company results come like Godrej, Bikaji, Nestle, Tata Consumer, then I think investors will realize that HUL numbers are not as bad. It's just a case of inflation and urban slowdown both hitting. My sense is Q4 you will see some recovery both in terms of margins and in terms of the volumes also, because palm oil has corrected now from the top by around 15%. So if it stays like that, and say in the union budget, which is there on February 1st, there is some good news for the urban customer, some tax exemption. I think the stocks could do well. The FMCG stocks could do well. But Q3 results for most of the companies will be challenging, except United Spirits, which comes out today. We are positive on United Spirits in terms of results. Yes.
But the volume growth, ultimately, Abneesh, it comes back to not margins, the volume growth, 2% volume growth. So if 2 becomes 3 or 3 becomes 4, will that excite the market?
So first, volume growth this quarter was flat. It was not 2%. The expectation was 1 to 2%. They delivered flat. Now, if you see for FMCG company, long-term average of pricing and volume growth, long-term for the category is more like 3.5-4% kind of volume growth for the category. So it is never a 7-8% volume growth. Long-term compounding in FMCG is very difficult. And for the India's largest FMCG company, which has scale and size, obviously, I think the long-term average is more 3 to 4% is what we should look at. In terms of pricing, if you see there, I think the good news is more pronounced, because last 5 quarters, 6 quarters, if you see most FMCG companies have been seeing negative pricing because the palm oil went up from $800 to $1,800. Then it crashed back to $800. That kind of a up move and a down move happens once in 40 years. So that was an aberration. Long-term average for FMCG sector is more of 2 to 3% pricing hike for the sector, and that is coming back. And for HUL also that has come back. And my sense is the 2% price hike which you have seen in Q3, that should further accelerate. Coming back to your question, does it excite investors? Yes, it does excite investors because this year the overall stock market is going to be challenging. It's going to be more of a defensive bias. And if you see, most of the strategists now are saying that this year FMCG and the consumer sector, in terms of defensive nature, it should come back. So I would say yes, dividend yield is there, no debt issue in terms of pricing and volume. My sense is worst is behind for the sector post Q3. So yes, the interest will come back because if you see in the infrastructure related sector, in terms of capex related sector, there is a concern because if the union government and state government are going more for the freebies, there is going to be some cut on the capex. So that is the expectation. And global slowdown is there, right? So exports, etc. So I would say yes, the numbers are recovering and defensive nature of the sector. I would say that the re-rating should happen once the Q3 bad numbers are absorbed across the companies. I think the interest is going to come back. Yes.
Okay. All right, Abneesh, really appreciate your time and thank you for joining us.
If you like this video, then like, share and subscribe to ET Now.